Hello folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective, asking ourselves what happened today and what does it tell us about tomorrow. I do a show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the Rocky Mountains. Folks, big day in the market. Yesterday we were looking at it. It looked like it would be big one way or the other. I'll be the first to tell you it wasn't what I expected. I thought we were going to break to the downside. I thought maybe we get a little bounce and then we come back down if we even get the bounce, or potentially we just break. When we looked at this early today and right after the Fed meeting, when they came out with the ideal of quote-unquote taper, 10 billion they're going to take off that 85 billion that they're doing monthly, 5 in each of the 2 groups. Market sold down, but the thing we didn't see sell down, which I told subscribers right away, is bonds. Bonds held. That turned out to be the tell early, right away. Stocks flipped around. Not only did they flip around and get a bounce, they got a heck of a bounce. I got the Dow Jones Industrials up, showing you the top here, broke a swing point high, and it's like a point under the other one. That range that's set up there, right, this consolidation range now has turned into another consolidation range. It did not break to the downside, but instead looks to me like now it looks just like a formality to test and break that top as soon as tomorrow. The only thing that has been keeping me not bearish but contained with respect to the equity markets has been Europe. And the European situation really hasn't changed. We'll get that in a second. Let's look at the ending numbers first. 292 higher, almost 292 and 3/4 points, almost 2%. 16,169 and 167.97. So 16,168 right back to the highs, all in one day. S&Ps 29.65 higher, 18.10.65, new all-time closing high, just underneath the prior highs that were out there, and we'll look at that, the swing points. 1.66% higher, did it all in one day again. Composite 46 higher, and that S&P, if you go look at it intraday, that was almost a 40-point swing intraday from down to up. Composite 46 and a third higher, 40.70. It was held back primarily by Apple. Apple was down big this morning, stayed down until everything else just drug it higher. NDX 40 points higher, also about the same percentage, 1.16, 3509 and 0.62. The Russell, actually the Russell lagged the SPX. The SPX got a huge boost out of the financials and the industrials. And the 14.8 here on the Russell, 133 and 3/4. Gold pretty much held even, then sold off. It's down to 12.30. It was down about $10 during the day, down a little bit more after hours. Silver flipped around, did the same thing. The dollar shot up 0.5%. The bonds held. We can see here tonight they're up again, or they're up. They were down today, but they actually held those lows. Volume expanded everywhere. And to see that, you can see it here on the Dow, right? Big volume expansion. There's nothing, as a bull, there's nothing to look at this and to not like. You got everything you wanted. Now you've set up the potential to carry this thing right up until the end of the year, because today, this week, really is the end of the any kind of volume trading. It's going to tail off, and usually what happens after that is you just grind in whatever direction you're heading, and right now these guys are trying to break it out. So we'll see if in fact they can do that tomorrow and push this thing on up to test new highs. Now, given the day-to-day I haven't got ending quotes. I typically have the quotes that are correct, but I don't have the volumes. So I'm going to flip through these. The volumes aren't going to be there, but I can tell from the sectors that these volumes are heavy today. So I can tell that these volumes are going to be, this is 32.7. It's going to be, 35, 36 at least. Volume expanded. So swing point highs, there's two of them up here. They're right at the highs. This is going to be multiple swing points breaking on this single time frame is the way this is going to set up. It usually says you get 2 to 3 bars follow through on this time frame. So assuming we get the break, which it certainly looks like that's coming, then you can expect this to extend 2 to 3 bars to the upside, and then potentially get your downside, right, that sets up some sort of an ABCD type structure to try to take it higher into the end of the year. That's the S&Ps. If we get the ending numbers, we'll come back and look at the quotes in terms of the volumes. The Dow is the only one I was able to pull. If I go over to the NASDAQ, I could tell it was fairly heavy volume as well. NASDAQ, the big December 11th bar that we were watching, 40.65. This thing closes over at 40.70. This also wants to go test the highs. If I look at the NDX, it's the same thing. All of them have done exactly what you would want. Actually, the NDX is slightly under it, so I misspoke there. So NDX still has to get over it. NDX has been the weakest. It was the weakest thing in the day. You can see, we were talking about, coming into the day, there was two things that we were looking at. One is we wanted to see whether the NDX could break down. Well, all morning long, it had broken down. It was underneath here when the Fed news came out, traded lower, then it worked its way back the other way, and now it's up here and it's going to probably take out that December 11th high, which would, essentially take it back up to the highs. The other one was the Russell. The Russell, we were looking to see if the Russell could break out. And the Russell came up to this price point intraday this morning. It was in this zone, and it failed and it headed back down. It was back down here on the Fed news. And then, of course, it flipped around also. And so what looked to be potentially an ABC structure on the way down has been eradicated back to the upside, right? So instead of ABCDs down, now some of these actually are showing ABCD structures on the way up. Most of them are still showing some sort of a range. The two-prong ranges that have been in effect, they're in the top range now. That's the Russell. Let's go look at the sectors now. The sectors, we had nothing on just one of them. The only one I didn't really see anything move, I believe, was the IYT. Let me pop into those guys, and here we'll see the volumes. So IYT really didn't do anything today. FedEx came out with earnings. FedEx didn't do very well. IYT didn't really move. So IYT is not showing us anything. But if we start looking at the rest of them, we're seeing breakouts and volume expansion. 45.07 on the XLB. Top of it's 45. It closed at 45. Volume's huge. It's going to break it tomorrow. That's a swing point high. It's going to break a single swing point high tomorrow. This one has a little small ABCD structure in place. You can see it here. It's one of the few that actually have one in place. It takes it up, up into this area, not that far. So XLB, I would expect it breaks out tomorrow, right? Which, from a bullish perspective, is great because we have been seeing the potential for breakdowns, and now it's just taking it all away. Now, the only thing that's really kind of odd, in this case, it didn't do it on the XLE, the energy sector, is that some of these, like we'll see on the XLF, they actually pushed volume to the downside and the upside. But if you look intraday, most of that volume's on the upside after the Fed speak, right? I saw on the SPX itself, the futures, over 100,000 contracts come in on that Fed bar. So that's a 5-minute bar, 100,000 contracts. When you're pushing a lot of contracts there, you're pushing 50 or 60. And so it's double, and that was a big move, and you could tell something was up and was going to carry. So here on the XLE, you got a swing point high here. The volume expands. That's going to test that swing point high and try to break over it. And just like the rest of these things, There's kind of a range up here at the highs. There's a range up underneath it that we were sitting in. So it's going to try to get into the top of the range. XLF. Now this is the one that really got the juice. Once the Fed, the way the Fed, if you think about what's happening here, they couldn't have orchestrated this any better. I knew that they would try to do it, in some fashion. It would be something like this, and that you would cushion whatever you do. You would cushion it with something else, right? And so they being the Fed. When the Fed came out with the announcement of the taper, the market shot down, and then immediately the next thing that you heard was that not only are they going to keep interest rates low, or basically at zero, but they're going to do it even longer than we expect, right? And that they're not going to increase it anytime soon, which had been the talk previously, right? But they totally flushed that out and said, no, we're going to keep interest rates basically at zero through 2015. That's another 2 years of 0% interest rates. Now, of course, like everything else, that can change, but you got to sell the notion that the Fed really isn't quote unquote tightening here, right? All we're doing is just taking a little bit off. And oh, by the way, we're going to make it even better over here and easier than it was, right? Easier money than it was, and we're going to keep interest rates down because of that. Well, the market is the one, on the long end of the curve, the market is the one that's going to set those rates. And with the Fed pulling some of that buying off what is mostly the long end of the curve, now mind you, it's only $5 billion. $5 billion is going to mortgage-backed securities that they're going to quit taking off. $5 billion in quit purchasing per month. $5 billion on the long end of the curve, mostly on bonds. Now, they do have some short and some long. I didn't see any stipulation of which one it will be. Maybe they'll take the shorts and keep buying the same amount of long bonds. And the whole point is that the long end of the curve is the part of the curve that the Fed has the hardest time controlling, and that is the TLT. And while we're talking about it, let's pop over and look at that TLT, because if the TLT starts to break down, it's going to break down this market. So we saw big volume in the TLT today. Pressed up, pressed back down. It's still hanging though. It did not break. So that first little shot down did not break. Then it pushed up, but then it gave it all up by the end of the day. So when I look at the TLT, what this tells me is that the potential to break this thing down is still here. It hasn't gone away. And that's a breakdown on multiple time frames if it happens. So if you start seeing the TLT breaking down, long-term interest rates start to rise, and once you see them probably breach about 3%, that's going to put a kink into the market. And that is what probably will keep this market from just totally skyrocketing off on another 3-month run. Because I do believe this is still going to be an issue, but we've got to see it happen. So far it hasn't. It's held. If the Fed can pull off what they want, they'll be able to keep these things under 3%. If they can't control the long end of that curve and it starts pushing over 3%, then the market's going to start thinking about, okay, well, maybe the Fed can't control the long end of the curve. And if they can't, if mortgage rates go up, if all these things that are tied to interest rates start to go up, that's going to put a crimp in the market, right? It's going to make it harder for equities to keep going up. So that's still the thing to watch going forward. Right now, as of today, it's still working for the Fed. Let's go back to the sectors real quick. And then I got to pop over to Europe before it's done too. So if I look here, what we were on? We were on the financials, weren't we? Let's go back to the financials. Okay, so on the financials, we've got bear with me, here we go. Big, huge volume expansion, just like on the SPX, big wide price spread. This one goes right up over this high. It's going into that swing point high. That high is 2164. We're just under it. 2163 is where we traded to. Volume expanding. This thing's going to probably take it out tomorrow. Financials, big piece of the S&P 500, along with technology. And the industrials did the same thing you see here on the financials. Big push up. They actually got over the swing point high, so they break. New high. XLK. Apple weighing it down all day, but still couldn't hold it back. I mean, it did look like it was going to, just like the NDX, looked like it was going to break. It's going back up, pushing pretty good volume today. Going to go back up and try to test the highs. And if we just walk down the list here, you can see every one of these expansion on volume, big reversals. There's the XLP. XLU looks pretty much the same way. Big reversal. And finally the XL V and Y. Here's the XLY, it's consumer discretionary. This one's already broken one swing point high, going after the other one. And the XLV got a nice big bump as well. It was the strongest one all day, held up and got a real big push. Now it's back to test that December 11th bar, and it's coming at it with volume. So when I see the sectors, I see the big volume reversals, I realize that there is volume over in those indexes, which I haven't been able to get the ending numbers on yet. That pretty much says the only thing in my mind at this point that can stop this roller coaster up is the European markets. Europe bounced, and again, I don't have ending quotes here in terms of volumes, but we did see bounces on these today as well. Here's the CAX. Now the CAX is the weakest one, so the CAX is the one that if it can actually drag it higher would be the one to watch. After today, I would be extremely surprised if we don't see more bounce here tomorrow, and when we look at the DAX, you're going to see that that's going to matter. The big bar here, and here, we've talked about before. I think those are going to be hard to get over. But if we start to see the German market go back to the highs, which is a possibility now because it doesn't look like it's going to break at this point, given what happened here today, then the retest regen off these lows would be the place to watch. That would still set up a larger ABCD structure down. It's just going to delay when it happens. So the CAX, that's the weakest one. That's the one that's going to have the hardest time getting back up. But at this point, it potentially can get drugged back up there. Here's the DAX, though. This is the one that's going to be the one to watch. Swing point high over here is 91, 93, 98. So 91, 94 basically. We traded at 91, 81. So 13 points away, which is nothing. They're going to hit that thing tomorrow. They're going to hit that. In the place it has to get over in my mind is it has to get back into this bar. Bottom of that one is 92.23. 92.23. 91.81, so you got about 40 points you got to get up and into that bar. If it gets into this bar and holds it tomorrow, especially if it holds it by Friday, then I would say yes, the DAX is going to go back to the highs. And if that's true, then there's going to be nothing to stop our market from crawling higher. So right now, I think all eyes should be on Germany tonight and that particular bar. And so let me draw it in so it's clear. The bar that's in question is this bar. The bottom of that bar is the key point, right? And there's actually a little bitty thing there if you really wanted to get technical about it. You've got the high on the bar after. Both of these were breakdown bars. That high is 92.53, the 92.40. Oh, where's the number? 92.23. So 92.23 up to 92. If I can get the number, there we go. 92.53. So it's about a 30-point gap there. It doesn't look like it, but it is. But to me, you just get into that bar and hold it for a bar or two. You're probably going to try to get to the other side. That's the key bar. And the FTSE is the other one. The FTSE got a bounce today too. Nothing big, but a bounce. So, these are the markets to watch. 3 markets to watch overseas, in particular the German DAX is the one. The one I would watch domestically over the next couple days is the bonds. The rest of this stuff, they're going to test the highs. I mean, they're already up there, and I'd be extremely surprised if they don't test them tomorrow and probably break over them. The only thing in my mind that could stop it is some sort of disaster overseas. After what happened here today, that's kind of hard to believe as well, right? If it's not doing what you think, I mean, I had my ideas about what would happen today. I've had my ideas about what would happen as a result of what was happening in Europe. I wasn't bearish on our markets. Matter of fact, I just simply said we were capped. Well, maybe we can take the world higher. It certainly looks like we're going to try off this Fed news today. We'll see if it materializes that way. When it does something like that, in my particular case, I just go with it. I don't have a choice. I'm not here to tell the market which way to go. I'm here to figure out which way it wants to go and just go with it. And so that's what we ended up doing today. Let's see what... I'm going to go back to the ox markets real quick and see if there's anything else. I want to see what gold and silver look like. Gold, it was a pretty bad reversal on gold today. Yeah, volume expands on it too. This is going to test the lows. I mean, it's almost there. And on the weekly, it's a little bit farther, but on the weekly, it's probably going to try to test those lows if it breaks these this week. Or it will test those if it breaks these this week. If I look at silver, silver is much stronger. Much stronger, in fact. It hit with volume. It'll test again tomorrow. Tomorrow would be a big day. Now, tomorrow's Thursday. Gold typically has huge days on Friday. So, tomorrow, if you're a gold bug, you want to see gold get out of his area. Because you don't want to come into Friday with it down here hanging around the lows. Let me quick look at municipals and junk bonds to see if there's anything there that might give us a clue. I'm suspecting these are going to have traded higher. And the municipals did nothing big there. And junk bonds, yeah, as well. So nothing special, but they didn't sell down at all. How about the other commodities? I didn't really watch these others. Let's see if they all sold down. Copper, not really. How about the oil? And then let's go see what the dollar looks like in terms of volume. Oil didn't do anything. It was flat. Okay, so the dollar. So if the dollar gets stronger, which it should, if we're going to really start to taper, and we got a big bounce, big volume. Yeah, that can carry. Let me see what the FXE did. I know it started flipping around. I saw it do so. Let's see what kind of volume they had. Oh, big volume there too. See, these are the oddities, right? Because you get volume with a new high as well. 136.54. Yeah, it just got over it and pushed with volume. Let me see intraday on this. Let's see what this looks like. Let's see where the volume came in. Yeah, it was all here. Oh, that's interesting. So the majority of the volume came in on a push up on the FXE. And did that happen on the dollar? Yeah, the majority of the volume happened on the dollar on the way down. So that makes me view these a little bit differently. So if I go back to the FXE, so that, yeah, I don't know if that's going to carry. I mean, maybe you get a little bit more move on it tomorrow. It'll be interesting to see. I don't know if it's going to carry or not, given the way the volume came out of it. Because that's usually when you get spikes with volume, you'll come back up and test them. Now, you can get a carry down and then you come back. This has been on quite a run already, but that volume is the inverse of what I saw on the rest of the markets. In other words, you got it on the opposite side. And this one didn't test the low though. That one actually missed it. So, all right, let's see if we got any questions here. How do you approach buying into a market after a blowout day like today? Well, I'm pretty sure you're a subscriber, and so you know that we did do some buying on retraces the last 2 or 3 days. If you need to put money to work, it's problematic, right? Because now you have big moves, big fast moves, and if you didn't get on board today, it just means your risk is increased. Let me pop into something. So like if I come into, let's just take XLF or something, and I'm intraday, and the reason for this is this was the Fed bar, right? Big switch, flip around, and then it just started climbing. It climbed the rest of the day, and most of them look just like this. The problem now is if I pull it back, say, we've been doing consolidation for 30 days, right? So about 20 days. So let's put it on 20 days. And if you put it on 20 days and throw it out to say 60 minutes, okay, now you can look and see, okay, where's the big bars intraday? And so if we look at this big bar, right, there's a big one here. The little overlap in today's move is this area. So if I were looking at a place to try to get into something, okay, that's a good spot. And then I have to look across to see where my anchor zones are. So this was a swing point high, got broken on this time frame. And actually, if I'm doing this, I really should put it up to 2 hours, because we have too many bars on this time frame. So here gives us about 60. So if I look at that, right, I can see a big wide price spread bar on the way down. I'd draw something in there as well. And I'd look across, I don't see anything else. So then I have a swing point high as well. And that swing point high, and I'm looking at the XLF, 2153, 2153. So this is the high. So the retest regen zone, and that's what I was doing all this for. The retest regen zone for this is here. Okay, so what I would do is I would look at this and say, okay, this would be the ideal spot. Here's where it shouldn't trade under. My stops could be down here. So I can at least get a place where I can try to start buying something, right, with tighter stops, because now I'm playing on a very short-term time frame. But the idea, in other words, if I switch this back out, the idea is that with this breaking on multiple time frames, it should try to extend farther. So if we get the break, right, on multiple time frames on those charts, you can try to buy the breakout. On those that don't have breakouts on multiple time frames, you have to try to buy some sort of a small retrace. The risk is higher in doing so, right? The risk of the probability of success is lower. That's the way I should say it. The probability of success is lower because you got to put your stops tighter, because this is a huge range, right, on one day. And so you can't put your stops way down here. I mean, it's just percentage-wise, unless you want to take that kind of hit, it makes it very hard. So when you ask me how to do it, I think what you do is you look at these guys and you go over, and let's quickly just go to one of them. Let's go back to, say, the XLF or something here, and look at it, and let me grab it here, major sectors, and I'll go back to it. I believe it's breaking on multiple time frames, was it? No, it's not. This one's just one single one. So that one I would try to buy on a retrace. I just gave you the intraday. On the daily is 2142. I didn't catch what the intraday was there. I was looking at. But that's, you got to try to get a little retrace back into here to buy. If they break out, they break out. The only ones I would chase on a breakout are the ones that should extend farther. For example, we looked at, what was it, XLI? No, I forget which ones. They had multiple time frame breaks. Any ones, the ideal is multiple time frame breaks. If you get it on a weekly and a daily, or if you get multiple swing points on a daily You can get 2 or 3 bars extension there. You can play a quick pop up, get out, and then try to catch a retrace. Other than that, you really have to wait. I mean, you can't chase, or you go find individual stocks that really didn't pick up too much yet, and you try to go on the individual stocks. DSX weekly, I'm in at 1202. Where should I put my stop? And do you think you can carry? Let me look at it real quickly before I go. DSX. Oops. DSX. Okay, so you got extension. You're going after. So here's one that's broken swing point highs. 2 of them. It's broke 2 of them today, or look, it looks like it's going to try to break 2. You got good volume. That's good. And let's look on the weekly, which is what you're trading off of. You're going for the highs. Okay, so your high is 1324. You're trading at 1264. You know, just like I did on the others, 1202, huh? That low is 1193. I just put my stop down underneath this. I just wouldn't give it any room. The December 11th bar was the bar. I mean, the December 18th bar was the bar. That's 1201. So I just put my stop right about break even and give it a shot to run higher. And then you know the drill. You get up here and you know, that's where you potentially take some short-term profits. Maybe on a partial. If it comes into it really good and the rest of the market's doing great, then you try to let it run, break out, and get a longer move on it. All right, folks, I'm going to give it up at that. Big change today. Not what I expected. That's the way it goes. You just go with the market. This market has been bullish for a long time. The market, I wasn't bearish on it, but I thought it was capped. I thought we could get one more push down, and that push down would probably give us a good entry point or better entry points into some sort of end-of-year run. Didn't give us the idea. Ran without us, or it took off without that setup. At this point, you got to keep what you got, let it run. It's probably going to run into the end of the year unless Europe fades or bonds fade. Those are the 2 to watch. If they don't do anything, this market will just continue to climb. Have a great night. Thanks for dropping in. Take care. Tell a friend, tell 2. I'm always here for you. I'm LA. This is and was your daily DailyWrap. Have a great night, folks. Good night.